Hello everyone, this is Nick Fenton with TickerTank. We've recently made two successful trades in TBT in a very short period of time. Shared details of these trades at tickertank.tumblr, that's TUMBLR.com. That's our blog. And these trades also went to Premier members before they went on the Tumblr blog, but just wanted to explain these trades in a video because I've received a lot of interest in what we've done here. TBT, we're looking at let me pull up the 1 year chart. So here on the 1 year chart of TBT, you can see we've got significant support right around this 32 price point, and that's what we based the trades off. So when I'm looking at TBT as a trade opportunity, I'm not actually looking at TBT, I'm looking at /ZB. Here's a chart of ZB. ZB is the 30-year Treasury futures, and there's several different Treasury options. This is the 30-year. The TBT is inverse 20-year, but really ZB is kind of the, if you will, the S&P of the bonds. We've got all the different 30-year, 20-year, 10-year, 5-year, 2-year, but 30-year is the benchmark. It's the S&P, the big dog of the bonds. So when you're looking for opportunities in bond plays, typically what I typically utilize, or I always utilize, ZB as my decision point. So what I've noticed here in ZB is at right around 126.25, we've got a pretty significant amount of resistance. So right here at 126.25, and we're looking at the daily chart. I'll zoom in here in just a second. We've got several resistance touches. I mean, it continues to have resistance sell-offs, so sellers are stepping in at this point and either taking profits or shorts are initiating their short positions right here at this price point. 1, 2, 3, 4, here's 5, 6, 7, and just several times we're seeing this fade off of this 126. Also, we're seeing short-term support right at this 125 level. So right here at 125, getting some support in ZB. And you can see this used to be resistance. It was resistance for quite a while, those areas. Then it broke resistance, and it's since been acting as a pretty solid level of support. We get some moves like that where it fades well below it, and right here. But for the most part, this 125 is a pretty solid level where buyers are stepping in. Once again, in short positions are covering. You can see today we're right around 125.05. So we've got this pretty tight range between 126.25, 125 even. Resistance 126.25, support 125 even. I'm going to zoom in here, get a little bit closer. So basically what we've done here on our recent trades in TBT is we've looked at this range. The range was established. We saw this big move right here up towards 126.25. This is when we decided that there's likely to be a sell-off in bonds, and we entered a bullish position in TBT. So let's go back over here to TBT. As you can see, we've had several support touches, just like we've seen those resistant touches. So essentially, 32 in TBT is comparable to 126.20 or 126.25 in ZB, which is the 30-year bond futures. So we saw this huge move to the upside here, and then it faded back very quickly as bonds rallied. Said, okay, here's an opportunity to get short bonds by getting bullish TBT. At this point, we sold the 32 puts at 88. Shared it. We actually shared that trade. We gave you a sneak peek of a Premier trade on the Tumblr blog, and we'll link to that here in the article area. So we did the naked puts there, and here's what the naked puts look like. So we've got this very bottom trade checked. This is just a single trade, selling, it's 15, but let me change it to 1 for simplicity purposes. We sold the TBT August 11th 32 put, 88-cent credit, and essentially what that did was it gave you a 31.12 cost basis, so your break even is 31.12 right there. Max gain, if it expires at or above 32 by August expiration, your max potential gain here is keeping the $88 per contract credit that you obtained by selling these puts. Max loss, theoretically unlimited. More realistically, we didn't see bonds going much under 31. Worst case 30 by August expiration if we really saw a major rally. but just didn't see that as a probable situation. Obviously we were bullish here, so we entered the short put position. We figured, hey, worst case scenario, if this does go against us, we'll be long TBT from 31.12, which is a position we were very comfortable with, a price point we're comfortable from. But ultimately, we felt confident that this would result in just covering for a profit and moving on. That was the case. We entered this trade, and here's the entry point right here. Right around 33.50, we started to see the action subside just a bit in TBT. And 33.50 is essentially the point at which bonds are 125, which we pointed out as support before. So support in bonds is going to be resistance in TBT. So this 33.50-ish area is comparable to 125 in bonds. We said, okay, got there in 3 days. Hey, this is a good opportunity. Let's just go ahead and cover. We covered the position. It was a gain of $34 per contract, and it worked out pretty well. That was, let me go in here to a 10-day chart. So here's our entry area. It rolled up nicely. We exited. Oops, let me get the oval tool out. We exited right here after we saw bonds stabilizing at that 125 support level. And it just so happened our timing was perfect. Bonds rallied huge that day as Obama came out and said, hey, we've got these 6 guys that are working a deal up and we're feeling confident that this is going to happen. And the risk of default diminished, which in turn caused a rally in bonds as the risk diminished in holding bonds. So we had a really strong downside move in TBT as bonds rallied. 3% move to the downside, so ended up down 3%. We initiated a new bullish position when it pulled back to this 32 support because bonds were again at that 126.20 to 126.25 resistance level. So we said, hey, we're going to keep playing this until it goes against us. Why not? It makes logical sense. Reward to risk is great. We're only risking a little bit of continued upside momentum in bonds before we cut this TBT position for a loss. But if it goes if it goes in our favor, this is going to be great. So we initiated that position. What we did this time was, because of this high volume downside move in TBT, we said, okay, we don't necessarily want to sell puts this time because it looks like there may be a higher probability of this thing actually breaking through this support level because of the high volume. But we did want to sell the news, and we did want to play the support level once again. So rather than just doing the naked puts, we opted to do the bullish put spread. So essentially you're selling the 32 put, and we bought the 30 put. And let's move this to one contract as well to make it easy. So in this case, your break even right here, we sold it at 70 cents. That gives you a 31.30 break even. Max gain, if it expires at or above 32 by August expiration, is keeping the entire $70 credit. Max loss is 130, so you're risking 130 to make 70. And the probability of success was strong because it was a probable area of a bounce. And all in all, it just seemed like it made sense. We put that trade on and covered that yesterday. I'm sorry, we covered that this morning, rather, as it came back up here towards this resistance area once again. So we saw this move this morning. We actually covered it early in the morning before it went up a little more after we covered it. But we covered it for a nice gain. We covered it at 40 cents, so we obtained a $30 per contract gain in this spread in 2 days. So, look how hard it bounced off of this 32. Sold the news. Next day, we had a huge gap to the upside. Nice continuation. Then another large gap to the upside this morning, and basically held that move for the majority of the day. So just wanted to explain this range-based trading. We're utilizing options. It's lower capital requirements, and you achieve the same amount of gains essentially as you would if you utilized a ton of buying power by buying the stock and then selling it at the top of this range. And essentially here we could enter a bearish position on a pullback here, thinking there might be a pullback towards 32, but I just prefer to just be a straight support play here. I think the support's very strong. The resistance of bonds right at that 126.25 level is pretty consistent, whereas the support seems to be more tighter of a support range. And we could easily break that support, much easier than I think we could break this resistance. So just kind of wanted to explain the relationship between ZB, the 30-year bond futures, and TBT, and how we use ZB as the primary focus when we're making these TBT trades. And kind of the thought process we go through, why we did the short puts the first time, because it just seemed a lot, really nice trade, low volume pullback to 32, much steadier. But we used the put spread the second time because the move was so swift and high volume that we thought there might be a higher probability of a support break there in TBT. So we used the put spread to cover our downside a little bit. And just thought I'd kind of walk you through it, share the process. Received a lot of questions, so figured this video was just an easier way to kind of answer all those questions rather than typing a bunch of emails. So if you have any questions, feel free to ask. Nick at TickerTank.com. Happy to help.